fellow traders, 'tis I, the Rumpled One. It is Wednesday, August the 1st, the year 2018. Let's talk trading. How to make money trading, part 3. The thing about it is Anthony Robbins would say, if you want a better answer, ask a better question. So maybe if we rephrase the question slightly, instead of saying how to make money trading, maybe we should say, how is money made by trading? But, it really is simple. Someone puts a trade on. If the trade goes their way and they exit before it goes the other way, they made money. They made a profit. Right? So really, it kind of boils down to a guessing game. You're guessing price is going to go a certain direction for a certain length of time and cover a certain distance. That's all it is. And if you guess right, pick right, choose right, and the market goes the way you thought it was going to go, you can make money. I mean, that's it. So why is it? It seems like only a few make money and most don't. Well, part of the reason is right here, the money and risk management. You have to know when to fold them. Can't be any simpler than that. You just have to take your losses in stride and then just keep going. It's just that simple. See, the thing about trading is there's really nothing you can do. Even though people like to believe that if you do this or you do that, you're going to make money trading. But it's not the case. And you can use all the supercomputers in the world and run all the analysis you want. Just like, yes, I run my frequency distributions. But that doesn't guarantee that the next trade I take is going to be a winner. It doesn't guarantee that over the next 10 trades, I'm going to make a profit. But it does give me just a slight edge. Just a slight edge. That over the long haul, I make money. So, here we have it right here. We've got a new month. It went in the wick zone. Now it's coming out. Now we know from the statistical analysis, frequency distributions, about 77% of the time, price leaves that wick zone. See right here, in this case, it didn't. In this case, it did. In this case, it did. In this case, it did. You see, it just, well, in this case, actually, it didn't. It didn't leave the wick zone. See, in this case, it left it. Left it here, left it there. So, it's just something to know and hopefully use to your advantage. Now, you see, we had a monthly open 111.809. Call it 111.81. So that's kind of a magic number. So if we're below that number, then we're pretty much heading down here. So this was a place to get short or get long. Now, if you opened the month and you jumped in right there and you got long, well, you see that was worth about 34 pips. Right there, just right off the bat. Might be able, and you see on the weekly, the monthly is contained inside this weekly this weekly candle here. And for those of you just tuning in, yes, we did fill the gap. And on the daily, you can see here, opened, we ran up, and then we came back down for the month. So that monthly close was at 111, call it 82. We opened there, so there was a gap to the downside. Could have faded that gap up on the daily and made a nice little profit there. And had you been writing it, this is where the stop loss, that's where one stop loss could have been right there. After it hit there, say, okay, if it comes back and closes below this level, I'm out. And you can see it here on the buy zone. There's trigger here, trigger there. You see, right there, you could have been caught. Right there, depending on where you put your stop, closing below the open or closing in the opposite zone. Then you see there was money to be made. And then you see here, once again, there's money to be made. So sometimes trading during the Asian session here is just a lot of chop. Yeah, you could get cut up here, because there's the pivot fading towards the pivot, chopped you. Okay, we do have a rat zone, 51 pip range. And you can see right here, red, green, breaking the high. There's a rat reversal off the bottom, or 6 pips off the bottom at the moment. And there's our weekly pivot. That's interesting. And here's our daily pivot right here. And go back to the H4s. There's our daily pivot. Still needs to fill. You can see right there, missed pivot. Looking to fill this pivot. If you took the trade now, you could maybe make about 19 pips. Once again, price action. Now, somehow the recorder got turned off. I don't know where it got turned off. I've been talking, and I guess I need to keep an eye, make sure the ticker's moving. So I'm not sure where I left off, but I'll just summarize. We only got 1 over 100 on the daily range. You see here, there was a chance to take that for a profit, to get short right here at that monthly open, which is also the daily, since this is the first day of the month, and pick up some pips to the downside. Buy zone, there was chop for the first, 6 hours, 5-6 hours here. Then finally we got a direction and we came back. Rat zone, right here. Red candle closes, green candle closes, breaks the high. There you go. Or continuation trade, you have a turn, red, green at the bottom. Next candle, just say, hey, it turned. Let's see what we get. Jump in right at the open. Either way, hairy hindsight, profitable, right? And looking here at the H4, you see this, we've got an open pivot, which you can see here, open pivot, about 20 pips if you want to fade the pivot, going with the daily candle color. On the price action, how do you make money? Okay, here we go. Randy real time, 2 ball at the bottom, green candle at the line. Back here, Harry hindsight, 3 ball at the top, red at the line. But one thing, if you're just starting out, and you're trying to make a profit, well, you just look at the daily candle. And the first time it hits the line, you go with the daily candle color. That's all you have to do. So see here, it started here. It was green here. There's pips to be made. It came back. It's going to be red here at the 70 line. So what do? You go short. Are you going to win? You have to wait and see. I don't know. But see, in trading, you're never going to know. That's why it's trading. There's a risk involved. But really, simple thing. I mean, you don't even need the ZZ indicator. You can just use the horizontal lines, go with the daily candle color. You can see here it's red at the moment. It's red. So if it hits that line, and see, actually, let's see. What was that price there? It's hard to see on this one. We can look over here. The daily open was at 88.09. So when it hit the 80 line right here, it was actually red. So it was red at that line, and you'd be up 9 pips taking that trade. And try to get the first line. And so maybe you say, well, I'm at work or something. Well, the market closes, what, 5 p.m. East Coast time, 2 p.m. West Coast time. So, maybe you can take your coffee break or lunch break or whatever break right around that time. See what color that candle is, and you could put your short and your long trades on. So you could have put a long trade on here, short trade on there, maybe only a 10 pip target, and see what happens. And once again, over and over, trading with the H1 candle color at the previous daily session's lines, which 4 of them comprise the wick zone. And as we say just about every day, price doesn't like staying in the wick zone. So right here, you go long. Right there, you go short. We say it every day. It's not hindsight. You see it happening every day. Question is, you guys see this. Are you using this, or are you just kind of watching a video, maybe getting some tips about getting your mind right, your own psychology, focusing on your trades and not worrying about this? Whatever works for you, that's the important thing. And you can see here, for some strange reason, let's see, what do we have? We use 15, yeah. So you can see here, we had holo set up. There was the short, and here's the long. Right now, real time. And there's not much happening here as far as the ticks, slow moving. Inventory reduction bars, once again, horizontal lines, trading with the candle color at the line. I mean, how to make money trading, or how is money made trading? By picking the direction that the market's moving. And so you can say, well, why am I waiting for a line? Why don't I just jump in now? You could do that. See how it works for you. See, okay, it's a daily green candle. I'll just jump in. But I prefer, if I'm going to jump in, I usually want the H1 to match the D1, W1. It usually is stronger because, see, if H1 matches the D1, see, right now D1 is red. So H1 is green. You're going to get things called pullbacks. And so if it pulls back and then goes the other way and they match, now you're getting back with the flow, right? But remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. Have a good month.